Go through the first question. Which page number? Page number 42. Page number 42, question number 1. 8,007% preference shares of 100 each. Okay, 8 lakhs. 1,80,000 equity shares of 10 each. We've got 11% debentures. Bank OD loan from directors, creditors are given. Plant and machinery, furniture, patent, goodwill, investment, debtors, stock, cash in hand, and which account? P&L account you must write off. Due to heavy losses and overvaluation of assets, the following scheme is adopted. Preference shareholders will surrender what? 20% of shares and they will be allotted what? 9% preference shares for the remaining amount. Actually, it is not actually surrendering. It is actually they cancel 20% of holding. Surrendering the concept is applicable only for which one? Equity shares. So preference shares, it's like 20% they forego. What is the entry you will pass for this? Hold preference share capital account debtor. What is the amount? 8 lakhs. 7% preference share capital 8 lakhs. So 9% preference share capital how much? That 80% of the amount. Balance will go to which account? Capital reduction account. See, the solution they would have passed as 2 entries or sometimes 1 single entry. That doesn't matter, but conceptually it is okay. 7% preference shares account debtor to 9% preference shares. Balance will go to which account? Capital reduction account. It's pre-solved, so just we will see the solution and the money. What is the next one? Debenture holders having a charge on plant and machinery would accept plant and machinery for what? Full settlement. Debenture holders, 10 lakhs. 10 lakhs. They will accept which one? Plant and machinery, 8,50,000. We can pass a direct entry. Debentures to which account? Plant and machinery. Balance profit will go to which account? Capital reduction account. Like this, no need to pass to entry also. This is actually they pass like a due entry madri. Debentures to debenture holders to plant and machinery to what? Capital reduction. Anyhow, the debenture holders account is credited. In subsequent entry, it is what? Debited. You can ignore that. What is the entry we can pass? 11% debentures account debtor to what? Plant and machinery. In full settlement kuduthirukanga. So balance will go to which account? Capital reduction account. Capital reduction account. Then trade creditors take over stock up to the value of how much? 6,20,000. Simple. Creditors account debtor to stock. 6,20,000. Book value of the stock is not given. So we assume that book value of creditor 6,20,000 took over book value of stock for what? 6,20,000. 6,20,000. So creditors account debtor to which account? Stock account 6,20,000. This one. Investments are valued at equity shares accept a reduction of how much? 4 per share. You can pass either a direct entry, equity share capital to capital reduction. What is the alternative entry? Hold equity share capital, cancel it fully to the equity shares of 6 each. Balance will go to what? Capital reduction. I hope they followed the second method. Equity share capital 10 each account debtor to equity share capital 6 each. Balance goes to which account? Capital reduction account. Capital reduction account. Then debtors and remaining stocks to be valued at what? Investments are valued at 60,000. Investments value 65,000. There is a reduction. There is a reduction by how much? 5,000. And debtors and remaining stock to be taken at what? 90% of book value. 10% reduction is there. 10% reduction is there. So what is the entry you will pass for that? Capital reduction account debtor to debtors to investment. Remaining stock 68,000. Remaining stock what is the total stock? 13 lakh, like 6,20,000 of balance. 6,80,000. 6,80,000 into 10%. 68,000. Then directors forego their loans in full to directors loan total. Patents and copyright goodwill have no more value means write off. So what is the entry you will pass? Debtors, investment stock, patent and copyright, goodwill, and of course compulsorily we have to write off which one? P&L account. So total 10,06,000 we write off. Then directors loan account debtor to capital reduction. Nothing but they waive the loan. If we prepare the capital reduction account, the balance will be how much? 39,000. That 39,000 is transferred to which account? Capital reserve account. and they prepared balance sheet after that. This is a traditional format of balance sheet. 2014 it was traditional format. Okay, it was a 2014 question paper. So, but you have to do it as per the new format. This will come under share capital. This will come under reserves and surplus. Bank OD will come under what? Short-term borrowings. Furniture and fittings will come under LIP, intangible assets, investments. Non-current assets like investments we will show. Then current assets like inventory, trade receivables, cash and cash equivalents we will tally. So like this I have given some questions. I request you to go through them. Okay, whenever there's a time, I request you to go through them. Use this for revision. The purpose of including multiple problems is in ICMAI material there is only one internal reconstruction question. All the others are like based on which one? Business combination. So that I request you to go through at home, because solving a pre-solved question is boring. And already there's a solved one, so we can just go through the answer. Okay, so there is a difference in answer we will see, but normally difference should not come. It will be the same. Entry wise there would have been some difference. They would have passed a due entry, then settlement entry like that. So that some entry would have been different. Okay. This, let us come to the ICMAI material question. It is there in chapter number 5, internal reconstruction. Read the question, please. Read the, no need to take the material also. If there is a material, you can take it. Sufficient. Let us solve it in our style. Let us solve it in our style. Let us see the answer at the end. Equity share capital, 8,50,000. Preference shares, 4 lakhs. We have got securities premium and which one? General reserve, trade creditors. Fixed assets include a goodwill of 1 lakh. Investments 40,000 is given to us. What is the next one? Stock in trade 2,75,000 is given. Debtors and which one? Bank balances are given. Then we are given preference dividend arrears கொடுத்திருக்காங்க. Preference shares are converted into 12% unsecured debentures of 1 each with regard to which one? 70% of their dues including arrears of dividend கொடுத்திருக்காங்க. For the balance, equity shares of 50 paid will be allotted. Authorized capital permits the additional shares. Okay. Equity share will be reduced to shares of rupees 50 paid up. Goodwill has no value, we have to write off. Market value of the investment is given 60,000. Obsolete stock 75,000 given, that means write off. Bad debts several percentage? 5%. Fixed assets written down by 1,80,000. Okay, the company carried trading for 6 months up to 30th September and made a net profit of how much? 1 lakh. After rating of depreciation, what? 25% per annum on the revised value of assets. Half yearly working resulted in increase in debtors by 80,000, stock by 70,000, cash by what? 50,000. Past journal ketirukanga. This is for the next 6 months. This is for the next 6 months. Shall we try to pass journal entry? Here, arrears of preference dividend is cancelled or payable? Arrears of dividend is cancelled or becomes payable? Payable. How? Clearly given. Preference shares are to be converted into 12% debentures of 1 each with regard to what? 70% of due including which one? Arrears of dividend. So when arrears of dividend becomes payable, it's a loss for us. It is a loss for us. So the loss will be debited to which account? Capital reduction account. Start. Start along with me. Capital reduction account data and arrears of dividend. How much is payable? 80,000. What is the old preference share capital? What are we giving for them? Okay. Maybe in the material, I am not seeing the solution. They would have passed to preference shareholders account. To preference shareholders account. Then they would have discharged. Preference shareholders account data. We can pass a direct entry also. What are we giving for this? 12% debentures for 4,80,000 into ever percentage? 70%. For the balance, what are we giving? For the balance, we are giving which one? Equity share cap. What is the balance? 1,44,000. No gain in this. Actually, there is a loss. We are paying for arrears of dividend also. Take up this, then we will proceed. Any doubt in it?
The question is given as 60,000 is public savings.
Then I made a mistake. 60,000 is 4,60,000 into 70%. Then, so that is about the equity preference shares. Equity shares, what do they tell you? 100 rupees each. It is converted into shares of 50 paid up. Two different entries we can pass. What is the first type? Direct entry, equity share capital account data to capital reduction. How much? 8 lakh, 50 lakh, 50%. 50%. 4 lakh, 25,000. Take up along with me. No need to wait. What is the next one? Since goodwill has no value, it has to be written off. Okay. Obsolete items of stock 75,000 are to be written off. Bad debts are to be written off to the extent of what? 5%. Fixed assets are written down by what? 1,80,000 is given. Of course, investment 60,000. What is the book value of investment? 40,000. So investment alone appreciates. All other assets we have to write off. All other assets we have to write off. And of course, which asset we must compulsory write off? P&L account debit balance is there. There is no P&L account. There is no P&L account. Goodwill alone to be written off. Let us pass entry. What is entry will pass? Take it up. Capital reduction account data to goodwill. How much they ask you to write off? Full 1 lakh. Then what else? Stock. What is the stock value? 75,000. Obsolete stock 75,000. To debtors. How much you would write off? 5%. Any other asset to be written off? To be written off? Other fixed assets. 1 lakh 80,000. Then investment value goes up. Investment account data to which account? Capital reduction account. Book value 40,000 revised to 60,000. 20,000 to 40,000 to 60,000. There is an increase in investments by how much? 20,000. Right? All these internal reconstructions happen on what date? 1st April 2017. Any other adjustment to given? Any other adjustment given? All these are post-reconstruction events. Post-reconstruction events, we will come to that later. Any other reconstruction event? No. So, is there any balance in capital reduction? Check pannu. Just don't prepare the account, debit credit method, let's check it. 4,25,000 credit plus 20,000 credit minus 3,62,500 minus 60,000. 22,500 you can transfer to which account? Capital reduction account data to which account? Capital reserve account. Capital reduction account data to capital reserve how much? 22,500. Or you can prepare the capital reduction account and transfer this. All these are 1st April 2017 events. But we are asked to prepare balance sheet after 6 months. How to do it? We have to include which one? Net profit after writing of depreciation how much? 25%. Revised value of fixed assets. On the revised value of fixed assets kuduthirukanga. Working capital increased by 80,000. Stock increased by 80,000. Debtors stock by how much? 7,000 and cash by 50,000 kuduthirukanga. So take up this, then we'll prepare the balance sheet, not on 1st April. Balance sheet will be on what date? 30th September 2017. Start. Balance sheet as on what date? 30th September 2017. Start. Working note 1 for share capital. Share capital 4,25,000 for preference shares we have given. So 5,63,000. Securities premium, general reserve already given in the balance sheet. Capital reserve 22,500. P&L for the first 6 months 2,02,500. Debentures given for preference shareholders will come. Any change in the credit assets given? Change in what is given? Debtors, stock and cash on kuduthirukanga. Creditors they have not given. Then other current liabilities are not there. Non-current assets. Tangible fixed asset. What was the fixed asset earlier? 11 lakh 80 minus 1 lakh minus reduction 1 lakh 80,000. What is the balance? 9 lakhs less depreciation. Depreciation, how much is given? 25% per annum on the revised value of fixed assets. So it is for 6 months. So 9 lakhs into 12.5%. Okay, 25% into 6 months. 25% for 6 months. So balance will be 7,87,500. Investment will be taken at 60,000. Inventory, what is the old value? Old value 75,000 we have written off. What was the old value of inventory? 2,75,000 we have written off how much? 75,000, 2 lakhs. And in the question it is given last line, there is an increase in inventory by how much? 70,000. Add additional. How much? 70,000. Total of 2,70,000 will come. Schedule 4. Trade receivables. What was the debtors balance? Old balance பாருங்க. Old balance எவ்வளவு இருக்குங்க? 1,50,000 minus bad debts எவ்வளவு இருக்கு? 5%, 7,500. It will give us 1,42,500. 1,42,500. Add additional. That is increase in debtors how much? 80,000. Give us 2,22,500. 2,22,500. What is the next one? Cash and cash equivalents. Cash and cash equivalents. What is the old balance given? Old balance 65,000. Adjustment cash increased by 50,000. So old balance given in the old balance sheet was how much? 65,000. Increase in cash balance how much? 50,000. So 65,000 plus 50,000. Tally आलिए. Immediately what will you think? The problem is wrong, you will come to a conclusion, no. What is your asset side total? 14,55,000. What is the liability side total? 14,67,500. Why it is not tallying? Why it is not tallying? Think and tell me. Don't look at the answer. Answer பாத்தீங்கன்னா they would have given creditors. Creditors at What is the creditors balance here? 3,80,000. But balance sheet they would have taken creditors as how much? Creditors they have taken as 3,67,500. They have taken as 3,67,500. But old balance sheet value is how much? 3,80,000. The 3,67,500 balance sheet panninga tally add. But how this 3,67,500? Paying attention. Up to this, nobody would have done the mistake. It is a very, very simple question. Here is where the students would have gone wrong. It is a past exam question also. How? Paying attention. Paying attention. What was the old balance of creditors? 3,80,000. Well, let us see. Paying attention. Paying attention. Before that, what is the opening balance of cash? 65,000. Opening balance of cash 65,000. What is the net profit made for the year after providing depreciation? So cash flow statement, do you remember? Add depreciation, because depreciation will not result in what? Cash outflow. We will add back how much? 1,12,500. Add panna varum Net profit 1 lakh plus depreciation at 2 lakh, 12,500. Wait, there is an increase in stock given in the question. Increase in stock, do you remember increase in stock, purchase of stock. Increase in stock is equal to which one? Purchase of stock, cash outflow will take place. Less, you know, we would have done decrease in current assets add பண்ணுவோம், increase in current asset less பண்ணுவோம், same thing. Less increase in which one? Stock. What is increase in stock? 70,000. Less increase in which one? Debtors. Debtors how much? 80,000. If you do that, you should get closing balance of cash. Because net profit is after providing all your operating activities and other things, right? This should have been the closing balance of cash. Okay, but it is given in the question that the balance increased only by what? 50,000, 1,15,000. What is the actual balance of cash? Actual balance of cash இப்பதான் work பண்ணிருக்கோம். Old balance with increase it became how much? 1,15,000. Actual balance is 1,15,000. So where the balance had gone, which means we have paid to creditors. We have paid to creditors. What is the balance? 12,500. We paid to creditors. So we are doing CMA finally. Up extra thing. So paid to creditors. So trade payable. What was old balance? Trade payable. What was old balance? 3,80,000. In the 3,80,000, we repaid how much? 12,500. 12,500. The balance became how much? 3,67,500. That is how they have given this 3,67,500. Actually, they have not done any working note. Just 3,67,500 கொடுத்துட்டாங்க. No working note is given. So sometimes while solving the question, how that answer came, solid doubt or this working they have not given as part of solution. Any doubt in it? Opening balance of cash, cash flow from operating activity. We purchased the stock. Increase in debtors is also like outflow of cash. Should give us closing balance of cash. But actual balance of cash is only 1,15,000 now. We paid to creditors how much? 12,500. Take this, then take up that working also. சின்னதா இருக்கும். So pass necessary journal entry and prepare what? Balance sheet. Of course, you have to prepare capital reduction account. %60 of inventory data, balance if any for which one? Plant, property and which one? Equipment. In this question they ask you to use which one? Balance of reserves. Now the general reserve they ask you to use. We'll check first up to which one? Capital reduction. First, equity shares paranga. 10 each is converted into 3 each. So what is the entry will pass? Direct entry pass panna, otherwise equity share capital 10 each account, data to equity share capital 3 each to which account? Capital reduction account. Otherwise you can pass a direct entry also. Equity share capital account, data to which account? Capital reduction account. Look at preference shares. If currently what is the dividend rate? 8% preference shares are to be converted into 16% preference shares without affecting their income, which means their income should not reduce. What is their present income? In the 2 lakhs, they will get 8%. 2 lakhs, they will get 8%. Now, what is the dividend they are getting now? 16,000. Present income is 16,000. This income should not reduce at what rate? 16%. So, capitalize at 16%. What is your current income? 16,000. This we are going to pay in the future at 16,000 now. So 16,000 by 16% will give us what? We are going to give 1 lakh of preference share capital. So in future you will get the same income. 1 lakh into 16%, 16,000. Balance will go to which account? Capital reduction account. Debentures, what and all we are giving to debentures? We are giving 12% debentures. 1,000 debentures into 50. Then Equity shares, 1000 shares into, that is for each debenture we are giving what? 6 shares into 3 rupees value, 18,000. Balance will go to capital reduction account. Directly capital reduction account போட்டுடலாம். By equity share capital, by preference share capital, and which one? Debentures, which is compulsory to be written off. In a compulsory rate up on P&L account you must write off. Then what is the thing you have to write off? Inventory and debtors you have to write off. இங்க நார்மலா balancing for we'll take it as some other assets. But in the question என்ன சொல்லிருக்கோம்? What is given? They ask you to use what? Reserves. They ask you to use reserves, which means that general reserve. What is the general reserve given? 1,50,000 also can be used in the process of capital reduction. So the plant property equipment will be the balancing. So for this you can pass an entry. What is entry will pass? Capital reduction account debtor, profit and loss account, all these things. We use which one? General reserve also. It's a simple question. Only one thing is use which one? General reserve for the purpose of capital reduction. Try to prepare the balance sheet with altered amounts. Balance sheet overall. Check your answer. Equity share capital reduced to 3 each. For debentures we have given, and the 8% preference share capital became what? 16% preference share capital, so 2,98,000 New debentures given 50,000. Current liability adhidam panniyavum. Tangible assets written off, balance 78,000. Inventory 60% over balance 40%. Trade receivable 40%. Cash and cash equivalents 70,000.